We've got an earnings alert on pot stock Tilray. Let's get to Aditi Roy on San Francisco with the details. Aditi.
Hi, Melissa. Tilray shares soaring after hours, up nearly 4.5% after their earnings. We're still waiting on the numbers from Aurora, but in the meantime, Tilray providing some color on its investments in a competitive market, which weighed on the bottom line. On the call, CEO Brendan Kennedy said the company is seeing high demand in the Canadian market and is spending more than $32 million to expand Canadian production capacity. Tilray is also investing in international markets. It just opened up a medical cannabis operation in Portugal. It also just closed its acquisition of Manitoba Harvest, and Tilray is looking for new partnerships. The company already has deals with Novartis and AB InBev. CEO Brendan Kennedy telling CNBC Tilray's eyeing a number of industries for future partnerships.
We've mentioned pharmaceuticals, we've mentioned alcohol. We're starting to see tobacco companies enter the industry. I think retail is the next area where lots of retailers throughout the United States are looking to have cannabis products or products derived from cannabis, primarily CBD, on their shelves. And we hope to have our products on their shelves in the second half of this year.
Another key metric from their earnings, total kilograms sold increased twofold to just more than 3,000, but the average net selling price per gram decreased to $5.60 compared to $5.94 a year ago. And Melissa, we're still waiting on those Aurora numbers.
All right, Aditi, thank you. Aditi Roy in San Francisco. Let's talk about Tilray here. Tim, you and I were discussing, I was taking a look at the net selling price, which went down precipitously quarter on quarter and also year on year.
Well, first of all, you still have shortages in Canada. So this isn't a case where people are saying oversupply. And some of this is just a function of bottlenecks in the system that are being worked through. The medical market is more profitable than the recreational market. And this is part of the dynamic. When you talk about Tilray, first of all, I think the company's been somewhat, beaten on the back of their own success in the capital markets. And so therefore, the valuation has been difficult to justify. Stock's down, 60% since late November. And I think at some point you have to look at a management team that has worked out very strong JVs and partnerships with some of the biggest multinationals in the world. This Manitoba deal, by the way, will probably put $65 million or so in their revenues alone for 2019. So I think they are doing some of the right things, but I think people look at a lot of the Canadian LPs and say, wow, these valuations still don't make sense.
All right. We should note that Aurora's earnings should be out at any minute. We're still waiting them. We've got the conference call tomorrow. We'll have Aurora Executive Chairman Michael Singer on the show tomorrow night, so you won't want to miss that. You're in a couple of...
I'm not in. I sold them.
Oh, you sold.
But I'm looking to get back in. And if you look at a lot of the charts, they've been under pressure. And Tim just said it. There was a cannabis shortage. Then you have licensing backlogs. And you still have regulatory headwinds. So you have three issues that have been in the marketplace that are somewhat known or have been prevalent throughout the whole space. I think it's probably time to jump back into a lot of these names.
When we walk over to the TV screen over there,
the plasma,
and we do the thing called what? The power pitch.
The fast pitch.
Almost got you there. Power pitch is one of my favorite things. And I tell you something, we power pitched a cannabis stock a while back when it was trading $97.
GW Pharma,
Look at that sucker now.
Yeah.
And all these analysts now putting $225 price targets on the back of it post-earnings.
So what do you got for us now, Guy?
I got a great guest. We got Tony Dwyer's boss. I mean, Tony Dwyer. Fantastic.
All right, well, amid all the pot mania, Canaccord Genuity has reigned supreme as one of the largest financiers of the budding industry. The firm, raising nearly $4 billion from cannabis companies since 2016, is behind some of the largest M&A deals in the space, including Canopy Growth's acquisition of Acreage Holdings and Curaleaf's most recent purchase of Cure Partners. For more on the cannabis craze and what is next for the M&A space, let's bring in Dan Daviau, the president and CEO of Canaccord Genuity, otherwise known as Tony Dwyer's boss. Dan, it's great to have you with us, and I would probably start off with asking you for a review of Tony's appearances, particularly yesterday night. But our show is not long enough for that. You're holding a conference now. I'm just wondering, just as a place setter, how it's changed in tone, even from last year or the year before.
Yeah, so this is our third year holding a conference in New York. I won't talk about year one because it was just painful to get people to come. But since last year, we've got 1,500 investors there today. And 1,500 investors, that's up double from the year before. We've got 100 companies there today. That's up over double than the year before. So the investable universe is expanding and the number of investors are expanding. And that's just our New York conference. We hold conferences in London, Toronto, Vancouver, everywhere, trying to populate the world and educate them on the cannabis investing space.
Let's talk about deals in the space. And obviously the The Acreage Canopy one was a big one. You're involved on the Acreage side, correct?
Correct, yeah.
And of course, it's a commitment to buy Acreage once a couple of triggers happens, either federal legalization or the easier treatment of cannabis companies on stock exchanges.
Correct.
Do you think this deal is going to go through? There has been some resistance on the activist investor side, namely Marketo, which has a 2.7% stake in Acreage.
Right. I think it's a relatively small holding in terms of resistance. Certainly, all the shareholders I speak to have been very, very supportive of the transaction. They understand that scale is really important to this business. You can say whatever you want about the transaction, but Canopy is a large company that's been spending billions of dollars on technology, on systems, on delivery mechanisms. The most important part of this deal is not so much the exchange ratio, that fixed price exchange ratio, it's the IP license. Like, Canopy has given Acreage a 90-month complete royalty-free IP license for all of their IP. What Acreage will obviously do with that is not only use their IP, but also use their brands and populate the U.S. with the brands. At the end of the day, that transaction will happen, if it's allowed to happen. They'll want to buy that.
There is one part of the Marketo letter that stood out to me, and that is the fairness opinion that was issued by Canaccord to Acreage, valued Acreage at $27.48. The analyst who recently initiated coverage on it prior to the deal has a price target of $35, and there's a no-go shop period on this deal.
Right.
Is that, in your view, going to be the standard in this industry? Why is there not enough of a competitive bidding process for this asset, which is Acreage?
Right. Well, the industry,
especially when your analysts think that there's more upside to it.
The problem is, of course, is analyst estimates are a year out. That's what they are. The price will be so and so in a year. It's not talking about the price today. And you look at the cost of capital in this industry. If you're going to be investing in this industry and taking the risk, you're going to want a substantially higher price. So a price now is not a price a year from now, number one. Number two, there's an incredible amount of volatility in this industry. You just spoke to it. So what an analyst publishes 2 months ago may not, in fact, be reflective of the cost of capital today in that business. And number three, there's Chinese walls in an organization. Analysts are allowed to do whatever they want to do relative to what our corporate finance team does.
Once the deal was announced, we had both Bruce and we had Kevin here on set talking, and Bruce seemed to be convinced that this could be some sort of a template for the industry. Do you think that this sort of deal could be replicated, or is this going to be a one-off? And what will the future deals look like, especially with all the constraints on cannabis companies that are listed here on the stock exchanges?
Yeah, I won't speak to who's going to do what, but clearly the Canadian companies, and Guy mentioned it and other people have mentioned it, that they have some very lofty valuations relative to their U.S. peers. Those valuations eventually will collapse a little bit. So what they're doing now is they're figuring out ways to get into the U.S. market. It makes sense. It's the biggest consumer market in the world. It's probably the biggest medical market in the world. So they've got to figure out a way to get in. There's a number of different ways to come into the market, whether it's through a brand deal or other kind of option deals. There's other companies that have explored on exchangeable shares. There's all kinds of structures that could happen. But rest assured, the 4 largest Canadian companies that all trade at multiples in excess of the U.S. companies are all looking at ways to come into the U.S.
And they will be here. They will be present in the U.S. in some way.
Or they'll have to buy their way in later. Right. Like if you're Tilray, Brendan Kennedy was just on your show, like he's got a big market cap. He could afford to buy his way in later too.
Yeah. Dan, all right. And Tony, 1 to 10?
Tony?
Tony who?
9.9.
All right, okay.
Yeah.
Dan, thank you. Good to see you.
Thanks for
Dan
having me.
Daviau of
Appreciate it.
Canaccord
Thanks, Tim.
Genuity. Tim, what do you think?
Well, first of all, congrats to Canaccord for really having a pole position in this industry. And you know, it's funny, you talk about companies listed in New York. I'd love to see when Canaccord might list in the U.S. because, I mean, ultimately, people are looking for exposure to the banking side of this. This is, you know, a very interesting play. The bottom line here is you have enormous M&A. You could make an argument, you know, at this event today, the M&A that either was a couple deals announced that's going to be taking place in the next 12 months will make the last 12 months look like people were sleeping. And that's a function really of where I actually do think that you're seeing cross-border deals able to happen in a way they couldn't.
Have you taken a look at any of these charts, Chris? I'm wondering because, you know, we saw Tilray go up right over the summer to
this was a $200. This was a $200 stock in the fall of last year, and it's a $50 stock where it will open tomorrow. I think it's a trade at the best, but it's not something that we own here.